Welcome back to MB Capital Strategies, and today we're discussing the following topic. Venezuela now officially has more oil than Saudi Arabia. Yes, Venezuela holds the world's largest proven crude oil reserves with approximately 303 billion barrels. That amounts to 17% of global reserves, while Saudi Arabia has around 259 billion barrels. This is confirmed by the EIA, which lists Venezuela as the leader. We can also see that here. I will link all my sources below in the video description. You can take a look at them yourself there if you like. Not a game changer for the oil price. Despite its reserves, Venezuela produces only 0.8% of the world's oil. That's about 742,000 barrels per day in 2023. In comparison to previous peaks of 3.3 million barrels per day in the 1970s, the EIA emphasizes that reserves are not the same as supply since extraction is expensive and time-consuming. Reserves are not the same as supply, and that is exactly the core mistake. The EIA explains reserves do not equate to supply due to extraction challenges, sanctions, and infrastructure decay. Translated, reserves cannot be equated with actual supply due to production issues, sanctions, and the decay of infrastructure. Production has dropped by 70% since 2013, despite gigantic reserves. Reports such as those from Rystad Energy show that despite 300 billion barrels of reserves, Venezuela has produced only about 1.1 million barrels per day, and that requires billions in investments just to maintain the status quo. The common stories in the media or analyses, these align with analyses from Wood Mackenzie and others, warn that the myth of Venezuela flooding the market is economically naive, since production is not scalable. Reserves only indicate geological presence, not economic or short-term production. The EIA defines reserves as geologically present and theoretically recoverable, but explicitly emphasizes extraction of extra heavy crude oil requires a higher level of technical expertise, making development economical, environmentally, and technologically costly. Extraction of extra heavy crude oil requires a higher level of technical expertise, making development. The EIA defines reserves as geologically present and theoretically recoverable, but explicitly emphasizes extraction of extra heavy crude oil requires a higher level of technical expertise, making development economically, environmentally, and technologically costly. In German, the extraction of extra heavy crude oil requires a very high level of technical expertise, which makes development extremely costly, economically, environmentally, and technologically. Massive investments are necessary, and it cannot be accomplished in the short term. Venezuela's oil is not ordinary oil. Over 70% of the reserves are extra heavy crude from the Orinoco belt, confirmed by the EIA. Most of Venezuela's proven oil reserves are extra heavy crude oil from the Orinoco belt. The majority of Venezuela's proven oil reserves consist of extra heavy crude oil from the Orinoco belt. Other sources, such as Frost24, refer to this oil as heavy and sour, which other sources, such as Frost24, refer to this oil as heavy and sour. Over 70% in the Orinoco belt, heavy, extra heavy, viscous, sulfurous, expensive. The EIA makes it clear extra heavy crude must be processed by specialized refineries. In other words, extra heavy crude oil must be processed in specialized refineries. This oil is viscous, meaning as thick as tar. It does not flow on its own and can damage standard facilities. CNN describes Venezuelan oil as thick, dense, and very high in sulfur. Translated thick, extremely dense, and with a very high sulfur content. This makes processing in refineries extremely complicated. Not all oil is of equal quality. Wood Mackenzie estimates the break-even costs for Orinoco oil at over $80 per barrel compared to significantly cheaper light crude. Diluent naphtha light oil imports are necessary. The EIA writes, Venezuela reduced naphtha imports but began importing naphtha and condensates in 2023. Venezuela reduced its naphtha imports but began importing naphtha and condensates again in 2023. Incor estimates that over 60,000 barrels per day of diluents need to be imported, mostly from abroad. Specialized refining. Specialized refineries. The EIA, normal refineries cannot process it. Most suitable are in the USA or Asia. Many have been shut down. Normal refineries cannot process this oil. Suitable facilities are mostly located in the USA or Asia, and many of them have been shut down. Refineries like Paraguay are operating at only about 10% capacity, the infrastructure according to the EIA. Aging pipeline network over 50 years old. Updating would require $8 billion. An outdated pipeline network over 50 years old. Renewing it would cost around $8 billion US. Forbes adds, dense viscous oil requires heating, dilution, and upgrading. Dense viscous oil requires heating, dilution, and processing. Corruption, lack of expertise, brain drain, and broken facilities. The EIA writes, massive corruption, firing of 20,000 skilled workers, lack of expertise, resulting in a lack of high-level expertise. Massive corruption, the dismissal of 20,000 qualified specialists, and a lack of expertise have led to a severe shortage of top-level technical knowledge. Production outages due to governance, mismanagement, economic crisis. EIA. Deteriorating infrastructure spills occur almost daily. German. The infrastructure is increasingly deteriorating. Oil leaks occur almost daily. Rose 24. Decaying midstream infrastructure, shortages of chemicals. Decaying midstream infrastructure and a shortage of chemicals. Nearly $53 billion in upstream investment over 15 years just to maintain current levels. Almost $53 billion US in investment over 15 years just to maintain the current production level. Council on Foreign Relations. $100 billion over 10 years for new fields. Around $100 billion US over 10 years for new production fields. The EIA writes, long timelines for scaling hampered by decades-long lack of capital. Long periods for expansion are hampered by a decades-long lack of capital. TD Securities, at least $20 billion in 10 years to add 500,000 BPD. At least $20 billion US and 10 years to produce an additional 500,000 barrels per day. Sanctions since 2005 stopped US imports in 2019, limiting growth even after relief. Sanctions since 2005 stopped US oil imports in 2019 and limit growth even after easing. Sanctions hampered production even with relief. Roadblocks remain. Sanctions hinder production even with relief. Massive hurdles remain. Atlantic Council. Lifting sanctions is crucial but requires incentives for investment. Lifting sanctions is crucial but it requires strong investment incentives. Morgan Stanley. There is a global oversupply, but Venezuela changes little in the short term. Globally, there is indeed an oversupply, but Venezuela hardly changes the situation in the short term. And the EIA says Venezuela's declining production contributes to global supply constraints. Venezuela's production decline contributes to global supply shortages. Wood Mackenzie, political risk and high costs pose significant challenges. Political risks and high costs present significant challenges. And Haas News, the economics don't add up. The economic calculation doesn't work out. Oil remains a cyclical trade. For now, Venezuela remains a myth. And with that, I would like to conclude my video. As I said, it's all complete. All references and sources are linked. Feel free to take a look at them. I briefly showed all the sources so you can see where I got everything from. I find that EIA is always very good for this kind of information. And when it comes specifically to oil, gas, or commodities in general, I think oilprice.com is a really good source, in my opinion. Alright, with that, I'll end the video. If you enjoyed the video, feel free to give me a like and also let me know how you see things, how you think Venezuela will change over the next 5 years, or whether you think it's all just a myth as we've just tried to clear up. If you haven't subscribed yet, I'd really appreciate it if you did so now. I wish you all successful investing. See you in the next video.